What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do weekly technical analysis of all of the indices and we'll try to answer the question of whether or not September will be bearish or bullish. So first up, let's take a look at a weekly chart of the SPX S&P500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, and because it is September 11th, I want to do a quick shout out to all of the men and women that serve this country and helping us maintain all of our freedoms and keeping this the greatest country on earth. It is very much appreciated. Alright, looking at our weekly chart of SPX, we can see that we did get a very strong bounce off of that extremely critical test, which was that level right around SPX 3900. Now I'm going to give you a lot of my opinions about the market, but do remember when I'm giving you my opinions that the stock market does not care what I think, so we always need to follow price action. But I do think if I offer you some of my opinions on what I see happening in the stock market, it could help you better understand the price action that could be right around the corner. So the first thing I want to remind you is that I do believe this is a risk on market while SPX is above 3900. And I do believe it is an extremely risk-off market if SPX ever breaks down below 3900. So for that reason, SPX 3900 could be the only level in the S&P 500 that you're paying attention to. And for that reason, you could be bullish above that level, but you need to be risk off or bearish below that level. Now, as you can tell, we are currently above that level, but that does not mean that we are out of the woods and there's not still plenty of volatility right around the corner. And that is what I want to spend the next couple of minutes going over. So when we try to answer the question of whether or not September is going to be bullish or bearish, I really do believe that September is going to go a whole lot of nowhere, but it is going to be extremely volatile and extremely choppy. And if you're trying to trade the month of September, it is going to be very challenging. So in my opinion, what I see happening in September is that we are at a very critical resistance on the daily chart. And I do believe the bears are going to try to defend those resistance levels. And the bulls will require one more test of support to show that they are still out there and they are taking back control of the market. So for that reason, what I see happening in the short term is we could have a little bit more upside to potentially get a false breakout of that daily resistance or test the daily 20 simple moving average. And then I do think we are going to see a sharp reversal to finish out the month of September and get a retest of the bottom of this channel. Now, as long as this retest is successful and SPX does not break down below 3900, I do believe that backtest that says the bottom is likely in is going to start proving itself to be accurate, because we will see a sharp reversal off support. And then we should start to see a very impulsive market, which is more than likely going to match seasonality for the rest of the year. That quarter four could be very bullish. So if you just visualize what is happening on this chart, we are going up in the short term, which is going to be a bull trap, because then we are going to get a sharp reversal down to support. That is going to lead to the bulls getting liquidated as they thought they were buying a bullish rally and got tricked. And that is going to make people become more bearish. So eventually it is going to turn into a bear trap before the sharp reversal off support, and then we enter some type of bull rally to finish out the year. Now this matches the backtest, this matches seasonality, and this also matches the stock market causing the pain to the majority, because if you remember, the bear bull survey is extremely bearish, and that is exactly why we were expecting to see this counter trend rally off of 3900. Nothing changes sentiment faster than price, so this strong bounce off support is more than likely going to start creating bullish sentiment, and then that bullish sentiment will be instantly punished with the pullback back to support. Those people will think it was just a trap and we're going much lower, and then we'll see that sharp reversal back into the bull trend, and then everything should start to take off from there. Now, whether or not this actually happens is completely irrelevant, because if we break down below 3900, you can throw this out the window and you instantly need to be bearish. But if you start to see this playing out, or you at least have this in the back of your mind over the next few weeks, I do believe it'll help you be a better price action trader and not get FOMO just because we're seeing a bounce in the short term. Based on what I'm showing you is that you should not be chasing this bounce. And if you are chasing this bounce, you need to manage your risk very tightly, because we could be going much lower before we find support. So in the short term, I do think you need to be preparing for a pullback, but in the longer term, I do think the bulls are going to start taking back control of this market. And you can clearly see that is happening on the weekly chart with the higher lows and higher highs. You can no longer compare this to the rally we had in March, because the rally we had in March had no higher lows and higher highs, and the falling knife never stopped falling. And as you can tell, we have higher lows and higher highs this time, and the falling knife did stop falling after week 3, with that week 4 being a very bullish engulfing candle. So all of that comparisons to March can now be thrown out the window. This is a much more bullish looking market structure, and there's just no way you can deny that because it's very objective, and we're looking at a weekly chart of higher lows and higher highs. And it doesn't matter what your bias is, that is a bullish market structure. So you need to really throw all of your biases out the window. You cannot be bull biased or bear biased in this market. You can simply be bullish above 3,900 or bearish below 3,900. I really do think it's that simple, and that is exactly how I view this market right now. So I don't believe there's any reason to have a bias unless you are being biased due to the price action being above 3,900. Then of course in the longer term you need to be bull biased. Below 3,900 you need to be bear biased because we could either retest the June lows or make a new low, and that is exactly why that is going to be such a critical risk level. Now let's talk about the back test real quick. As you can see, our drawdown was between the average drawdown and the max drawdown, so that is a very valid area to reach a drawdown based on the back test and then resume back into the bull market. So the average drawdown was right around SPX 4060, and the max drawdown was down here right around 3841, and our drawdown was somewhere around 3887. So without a doubt, that is a very realistic drawdown based on the backtest, which means over the next 6 to 12 months, we can expect very positive forward-looking returns, and that is never going to be synonymous with a smooth ride higher. There are always going to be higher highs and higher lows in a very volatile ride. So this is what I see happening over the next few weeks, but obviously we need to let price action do all of the talking, so don't take this for anything other than my opinion. The next bull breakout will be that break back over 4158 and breaking back over this resistance trend line right around 4200. If we can get back over this level right around 4228, that is definitely going to signal that we are very likely heading back into a strong bull trend. And then of course, breaking the previous weekly high right around 4280 is going to be more confirmation of yet another weekly higher high. So to answer the question of what to expect in September, expect a lot of chop, which is going to be bullish in the first half of the month and bearish in the second half of the month. And then in the month of October, we should see a continuation of the bull trend that could very likely take us into year end. Now that is just an expectation. You need to let the price action do all of the talking, and that is why you instantly need to get risk off if we lose that support zone right around 3,900. Jumping over to the bear bull survey, we can see we're back to extreme bearish sentiment with over 53% of the people that are bearish and only 18% of the people that are bullish. And this does go hand in hand with why we are likely seeing a bounce off of that strong support, because there was just too many people stacked up to the sell side, and the market loves to reverse and go against the majority. Now keep in mind, this sentiment indicator is looking out over the next 6 months, so it means nothing about what could happen in the short term. So after this bounce, we could still get a pullback back down to that support and build up more bullish sentiment because people love chasing price action, and price action is currently going higher. So look for the month of September to be full of traps, bear traps and bull traps alike, and I do believe the market is currently setting up a bull trap before it sets up the next bear trap, and then we will likely see that smoother ride higher to finish out the year. So do expect this survey to continue to whipsaw around between bearish and bullish, but overall it is likely going to remain overly bearish until we get through the rest of this year and establish some type of bull trend. On the Nasdaq 100 NDX weekly chart, you can see the NDX also bounced off a very critical risk level, which was right there, right around 12,107, and we did touch the bottom of the support channel, so it looks like we have a very well-defined channel of highs and lows, and we are seeing price action respecting those levels. Now in the NDX, you need to get instantly risk off if we lose this support zone right around 12,100, so do keep that in mind. And just like I said with the SPX, it could be possible to go a little bit higher, get that pullback to set the bear trap before we establish the bull trend, bounce off the support channel yet again, and then try to make a crack at breaking above the resistance trend line and retesting that resistance at 13,566. Also keep in mind we have weekly gaps to fill up here, so it would not be out of the question to go fill those gaps and still make a lower high even if we were going to continue into the bear market. Now the backtest tells us the bottom is in, so that means the bear market is likely over, which means we need to be expecting higher lows and higher highs until the price action proves otherwise. It's really that simple, because if something is going to change in the chart, we will see it in the price action, which gives us instant feedback. There's no reason to use lagging indicators because price action is king, and we can see price action instantly losing critical support, and we can instantly get more bearish. There is no reason to trade based on speculation. set your risk at the risk levels, and then just trade accordingly. On the Dow Jones weekly chart, you can see we're also holding support, and we did get a very positive bounce, but the Dow Jones did not get a bullish engulfing weekly candle, and the Dow Jones is the index that still has the very large gap to fill to the downside. Now, we know gaps typically get filled, but we never know when these gaps will get filled, so do not just become overly bearish due to that gap. You need to see price action losing critical support, and in the Dow Jones, that is going to be this level at 31,500. While we are above that level, there is no reason to be bearish, and if we break below that level, there is great reason to instantly become bearish, because that is a very critical support that if it fails, we could be going much lower and potentially even lower to fill that gap. To the upside, the next strong resistance zone is going to be right around 33,300 and 33,770. On the Russell 2000 weekly chart, again, we had a bullish engulfing weekly candle fully engulfing last week's sell-off, and we are getting a bounce off of the retest because we did get the breakout and retest. This is by far looking bullish, but in the short term, we could still get a pullback to retest the higher low before we go any higher. So do look for resistance at 1889, and then above 1889, you're looking for resistance at 1968. If we break below this previous low at 1800, that is going to be bearish, which means we could retest the lows in the 1700s. So just keep that in mind and manage your risk around that level. On the VIX, we had another week of VIX crushing, with the VIX crushing back down below 24, which is going to help favor the bullish scenario. With the VIX crushing below 24, it's increasing the probability the VIX wants to fill that gap at 21. But do keep in mind, if the VIX spikes at any point back above 24, you instantly need to get more cautious, because that is going to signal more volatility. While the VIX is below 24, you can stay more bullish, and there's still strong support on the VIX down here right around 20, which is where the VIX continues to bounce off of every time it gets down to that level. On Bitcoin, we are currently trading right around 21,500, and Bitcoin is getting a decent high volume bounce off of that support level at 19,000, which could end up being a double bottom if we can break the neckline just above 24,000. That will be synonymous with breaking the resistance trend line, so it will look extremely bullish, and that should easily send Bitcoin back up to about 29 to 30,000. So Bitcoin will be looking a lot more bullish above 24,000 and a lot more bearish if it breaks down below 19,000. Below 19,000, we could make that next leg lower all the way down there at 12,000, but I do believe that crypto winter is in its end, and we are very likely going to see the start of another Bitcoin bull market. So in my opinion, this is a great time to stay bullish above 19,000. On the ARKK ETF, we did have a positive bounce this week, but we did only come back up to resistance, and we are still below the support trend line on the weekly chart, which if I zoom in here, you can see that we did have a very strong rejection from that level, and then we did break back down below the 20 weekly moving average. So we're back up to the 20 weekly moving average, and we're still below all of our risk levels, so we still do need to remain bearish on the ARK ETF. If it can get back over 48 on a weekly close, that will be looking a lot more bullish, and then we'll want to take out this weekly high at 52. So jumping back over to the weekly chart of the S&P 500, keep in mind I expect September to be very volatile with traps in both directions, so do not expect a smooth ride higher or a smooth ride lower. Typically, September is a great month just to take off and watch the price action until you get more clarity, and that is why I drew out the path of what I expect to possibly help you understand the price action and understand the chop. Remember, this is just my opinion, and the stock market couldn't care less what I think, so you shouldn't put too much emphasis on anything that I tell you that is my opinion, and that is why I always tell you to follow price action and not something somebody says. Never get sold on a story. Always follow what price action is telling you. Price action above 3,900 is bullish, and price action below 3,900 is bearish. It really doesn't get any simpler than that. Also, don't forget I'm still running the 50% off promo code for your first month of Bank Trade Alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, and you can get 50% off your first month of Bank Trade Alerts. And I think now is the best time to try out Bank Trade Alerts. Also, if you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you have access to all of my intraday updates and analysis. If you're interested in joining Bank Trade Alerts or the Stocks Channel Discord server, you can find out all of the information and the links on how to join in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.